it's a disservice to the industry how easy it is to get the basic life license. You don't really even have to know much. You have to be able to memorize what they want for tests.
Our clients are the most knowledgeable that these companies deal with. Most policyholders, it's a piece of paper in a drawer. If you're looking for just some feel good about your stupid ideas and you just want kind of a limp wrist, agree with you on everything, like we can find a liberal leftist advisor for you.
Yeah, I always tell people, unless you divorce me and get another agent as a servicing agent for some reason, for better or for worse, we're stuck together until one of us dies.
All right. Hey, everybody, what's going on? Welcome back to Remnant Finance. We got Brian in the alert shack there. What do you guys actually do on alert?
Well, we typically sit here like firemen who very seldom have a fire, but as a matter of fact, they had one yesterday and had to launch. So if you get called, which could happen 24 hours a day, we launch, usually in support of whatever fighter jets are scrambling for whatever reason. But
So you just live
90% of the
on,
time,
you live in like a,
we just live in like it's a big building with, 6 bedrooms and kitchen, living room. So like I said, just like kind of like a fire station where you just have to be
yeah.
here. It's manned 24 hours a day, 365. So
How long is the shift?
2 days, 48 hours.
Gotcha. Gotcha. All right. So that's why Brian looks like he's in a government BOQ room or whatever.
Yeah, with the nice furniture
Anyone
they
in the
give
middle,
you.
it's funny. Like that,
There's the
that
flight
furniture
suit
is
hanging.
identical. Yeah. It doesn't matter where you are. You could be in an alert shack in Pennsylvania or a BOQ in Atsugi, Japan. The furniture looks the same.
Yeah, it's always as
So,
bland as it could possibly be.
all right, cool. Well, today what we want to talk about is basically what is our process at Remnant Finance? What do we do? And then what should you be looking for and expecting in your advisory relationship? We've had, you know, like what a lot, most of what people interact with us is content, right? Whether it's the YouTube uh, podcast or listening to us, maybe reading the blog, hopefully. But until someone gets on our calendar, we are just a content company, right? As far as someone finding us is concerned, and so we've had confusion before where people are like, "Oh, hey, this is really cool. You guys got me interested in IBC. I'm learning a lot. That's awesome. Hey, and I set up my policy with XYZ, right? And we're glad that you got that policy. But our business is setting you up with a policy. And there's a lot of good folks we know that do this business. But we want to say, what if you're looking to set up IBC? If you came across us on Google, you found us on YouTube, whatever, you're interested in IBC, well, we can help beyond just the education piece, beyond just this content. We will take you through from start to finish and get you a policy. And then what should you be looking for as you evaluate the companies that you get your policy with, as far as the insurer goes, as far as the agency goes, as far as like Brian and I, Remnant Finance. And then we just want to talk through what we're going to do if we end up working together. And then, yeah, so what you get on that, Brian?
Yeah, well, I mean, everybody has a process. There's a lot of different types of companies. There's set it and forget it. There's people that just try to get you hooked up. There's people that try to sell by illustration. We've even experienced people who were introduced to this, went somewhere else, went with, a one of the big firms somewhere that does like full financial planning and insurance. They tell them, yeah, we can do that for you. And when they set it up, it's absolutely not structured well. There's no proper service. They don't even understand how to use it. They just set them up with vanilla whole life. So part of it is finding somebody like us who knows what they're doing and I think the value in working with us, or like you said, some of the friends we have and other people out there, is that this is all we do. So we're
Right.
not just trying to add this as a side piece to your full financial plan that we're also a part of. But yeah, so there's the whole process of like, is it an education process or is it a sales process? I think that is the key when you talk to somebody. When you talk to us, it's going to be more of an education process up front than it is, let's get you a policy and check the box and move on.
Yeah, absolutely. We spend, we've spent 10 hours with someone who, like education. We're doing calls, we're teaching, and that person may or may not decide to get a policy. But as far as we're concerned, education is the goal. I tell every client, I want this to be the asset that you understand the most. And so there is a lot of content out there on insurance and IBC, and a lot of it is really substandard, and a lot of it's just straight up harmful for you, in my opinion. There's everything like Brian mentioned. There's the enormous carriers, like the ones we've told the story on in the past, where the financial advisor who you should not be buying your life insurance from says, I can do that. I've heard of that. And that exact story where we now have children with VUL policies and the parents with whole life policies that have no PUA riders attached, right? And then it's like, okay, so um, we are going to unwind that bad situation and set you up with something that actually makes sense. Then you've got, the my aunt sells IULs through whatever MLM and can't talk through it for more than the 30-second kind of initial pitch, show you some obscene illustrations that show unrealistic numbers that are legally capped because the people were doing such bad service in exaggerating expected returns that Congress had to limit how much they could show as a maximum, and that's preposterous. But then there's a lot of good shops out there as well that do it right by our estimation, and we want to always make sure that we're providing the education piece alongside the policy and the policy service. So
Yeah,
let's
and
just
I've got to say that of the good ones out there, not exclusively, because there's some good folks I've talked to, so there's some good folks doing really good business who are not a part of the Nelson Nash Institute, but I would say that the overwhelming majority of them have been trained in putting this together the way that Nelson described it and the way that Nelson taught it. So I
yeah.
think being a practitioner or finding people who are practitioners is really a great first step because you just don't know what you're getting otherwise. And there are people that understand it and do it well outside of the institute, but not many.
Let's start there. So there is confusion that I've encountered between, you know, what is the Nelson Nash Institute? Is that a license you guys have? And we have some guys that want to become agents with us, and that's even for them. They're existing clients. They've got policies. They understand IBC, but they're like, all right, so I can't do this until I get my NNI, Nelson Nash Institute certification. Is that correct? And so we've got basically three different things that are required of an agent. Well, two things that are required, and one thing that is optional but very highly desired, in our opinion, if your goal is IBC. We've got your life license. We've got the contract with the right company to do an IBC structured policy, and then we've got the Nelson Nash certification for the agent. So what's the difference there? What are some things that a client should be looking for? And I just want them to understand what the differences are there, because you could have someone who has a life license but can't write you business with the right company. You could have someone who can write you business with the right company
So you weren't
that isn't
actually
an
asking
NI.
me.
No, not really. I mean, I am, but I like I, these are not all like mutually exclusive. And so what is the difference between, say, a life license and a contract with the company to start with?
Well, a life license is something that basically anybody, if you could pass a very basic background check can get. It takes a small amount of study. I honestly, it's a disservice to the industry how easy it is to get the basic life license. You don't really even have to know much. You have to be able to memorize what they want for a test. So that's the first hurdle to be able to legally sell life insurance. And it's a really easy hurdle to get over. So just because somebody is qualified, meaning they have a license in the particular state in which you live. And when you start this, you get it in your home state. And then most of them have like a reciprocity where, at that point, it just becomes government fee collection. And if you've passed it in one state, you can get the license in another state. So if they're licensed in your state, they can sell that insurance. It doesn't mean they know what they're doing. I mean, getting licensed just means you could read a study book probably, about this thick and pass the state required, pay a fee and pass the exam. So that is hurdle one though. You have to do that in order to sell life insurance. What was the next one is with the company. So company selection is huge. There's, I don't know, what do you think, 10, 12 companies that we typically see that could write a policy prescribed in the way that Nelson Nash taught us. And the
Mhm.
number one side of that is it has to be a mutual company. So sure, I could go, a formerly mutual company, Prudential, I could get my life license, go get contracted by Prudential, tell you that I can do this, but I absolutely can't because I'm with the wrong company. And
Right.
they can't provide the flexibility, they don't provide the dividends and all the things that we want in a policy. So they secondary is that person has to know which company to be writing for. Pretty easy to find online.
So what's the difference between a captive and an independent agent, and what are we, and what are the pros and cons of those?
Well, I mean, a captive agent is just somebody that works for a large firm. Like a really simple example for that would be like Northwestern Mutual. So, to the best of my knowledge, and there may be some caveats to this, but if you work for Northwestern Mutual, you work exclusively for Northwestern Mutual. You're not allowed to have outside contracts writing for different agents or for different companies. The independent brokerage is somebody that's what we are. So we can get an appointment with multiple companies, and we have an appointment with multiple companies, the ones that we most prefer. So then the benefit there is comparison.
Yeah, so we ourselves can't write a Northwestern mutual policy because we don't work for Northwestern. And a Northwestern agent, your financial advisor that works in Northwestern, or a life insurance agent at Northwestern, can't write policies with any other company. So you're basically walled off. So we've had that's actually the company in that example of the financial advisor says, hey, yeah, I can do life insurance business. I can't do any other companies. I can't write you policies with any other companies, but I can give you our whole life policy. Now theirs is just happens. It's a phenomenal whole life policy. It's a phenomenal insurance company. It's the highest rated across the board of any financial service company. Great company, not conducive to IBC when we think through all the requirements and what we would like to do with a policy. And so,
It, well,
that
the other benefit is if you are not captive, is like I sort of alluded to. I thought you were going to run with it, is comparison. Every single person. So when you call us, you have specific goals that we're going to talk about. You have specific objections. You have timelines. That every single person is different. So we have multiple carriers that we can kind of shop because none of these companies are the best company for everybody. And so I think that is a little bit of a problem when somebody exclusively writes for one company is only willing to, is that it packages you into one possible product, or they've got a group of products, but maybe there's a more suitable in your situation. Maybe there's a more suitable design. Maybe there's a more suitable death benefit based on the way that they write with the guarantees. There's all kinds of things, and that's what I like about being an independent brokerage is like I can find out something about you, talk through the multiple criteria with each company, figure out, and even maybe show you after a little bit of education what the differences are, on paper, and
yeah,
choose what's right for each individual person. Where I couldn't do that with Northwestern. It'd be like, here's what I got. This fits you. I guarantee it,
yeah,
even if it doesn't.
yeah, for sure. If you have on that line on that idea, they say there's no deals in life insurance, or they don't, we do, and people that I think do that that represent the industry well will say that there's no deals in life insurance. And so if someone's giving you a deal, hey, we can offer the best this and this, well, those two things are generally going to be not mutually exclusive. That's not the right term, but like if you emphasize one, you necessarily de-emphasize the other. And so, for example, some of the companies we work with are very big on the non-guaranteed side, large dividends at the expense of, you could say, the guarantees. And so, the other company that's going to dial down the dividends is going to increase the guarantees. And so the output is, if you have the exact same premium, same annual amount of premium, same structure of base to PUA, the exact same input of premium dollars is going to generate enormous death benefit with one relative to the other, but the one with the smaller death benefit is going to generate a lot higher dividends. And so I describe this as, one starts further ahead and takes smaller steps. The other starts behind but takes larger strides, and they end up at relatively the same place in 30 years, right? These are both phenomenal companies. They meet all the criteria. They're mutual companies. They've been in business over 100 years. They've generated dividend and profit every one of those 100 years or more. They have the PUA rider flexibility that we need. or that we desire for this strategy. But if I have two clients and one of them is a father of four with a stay-at-home mom, for his wife's a stay-at-home mom, and he has no existing insurance, and the other one is a 25-year-old with no family and a lot of extra cash, if they both want IBC, if they both want, and what I mean by that, if they both want the ability to generate cash value so that they can use that to take over the banking function in their life, well, one of them has a very higher order need for death benefit right now. If that father of four, whose wife is not working and has no insurance, dies tomorrow, his wife is in a terrible situation that having access to cash value and policy loans today does not solve, right? So he has a much higher order need, and we're going to go with the company that the same premium is going to generate a lot more death benefit versus the one who has nobody depending on him, who really wants just the value of banking right now. You're not going to, it's not like you're not going to get death benefit. And it's not like it's not going to grow into a large policy down the road for you, but we might go with the company that's going to generate a lot larger, quote, cash on cash return, i.e. dollar of premium in generates more than a dollar of, cash value out, higher dividends, et cetera. And so that ability for us to kind of steer a client one way or another based on their goals is, I think, a very valuable service. And so again, that captive agent can only offer you one company's products, and agents that are independent but exclusively work with one company, of which a lot of people we know only work with one company. There's a lot of value in the simplicity of that. You get better relationships. You have a more established, the more business you do with the company, the more you matter to them, in the sense of you get on the phone and talk to someone and they actually will go out of their way for you. Well, if you're doing occasional scattered business with them, maybe not. They're going to prioritize those agencies that are doing a lot of business with them, and so how much can you move the needle with the company? So there is a lot of value in being
Oh
kind
yeah.
of having that. We generally work with two primary companies, and we have a few situations where we work with a third or a fourth company. So we do have, I think I really like the two options we have, because they do meet those two kind of ends of the spectrum. Even though if we only had to work with one of them, we would happily do so, because they're both phenomenal companies. But there is a lot to company selection that I think I appreciate having the ability to differentiate.
Yeah, yeah. I certainly don't have a favorite either. It's really the needs of the client. And that's the
Mhm.
most important thing. So, like you said, there's huge value, and we've done pretty good business with them, that they do help us out pretty well. It would be better if we had all of our business going in one place for sure. But I personally would rather deal with a small amount of the headache with the company of us, meaning we're not a priority. We're not as much of a priority because we do less business there, but that product is better for the client. So, um, however, we got great relationships at those both of those two where we get great service. So I don't think it's a huge factor. But I mean, I'm just saying, if I'm starting new and I'm a really really tiny minnow in the pond, I still want the option to have what's best for the client over what makes my life easier as an agency.
Yeah.
That's more important to me, is having options.
And I should say, we both have, but Brian and I both have policies for our own families and ourselves with the two primary companies that we both use, that we set up our clients with. And very happy with both of them. And if I had to move all of my family policies into one or the other, I wouldn't be disappointed, or, it wouldn't move the
No,
needle for me at all.
not at all.
So
I
company
like, yeah.
selection is very important, but if you're working with someone who's NNI, who's gotten that additional vetting, you're going to be put with the company that's going to work for you. It's just, personally prefer the ability to put a client with a company that I think might make more sense. So that is a big part of it. But let's go back to, we have our license. That's like like a real estate license, right? That's just the first step. It's easy to get. You could get one in a weekend. You probably know 15 people with a real estate license. It's not that hard to get. But then having a real estate license, that's like step zero. The harder part is, well, now you have to actually be able to list a property and have all of these. There's a lot of steps with the real estate industry, but like, you can't just. I mean, you can, but effectively, it's hard to just have a real estate license and then take that and now go sell a property and earn a living that way. And so getting with a company, getting with a brokerage on the real estate side is the larger challenge. In the same way, you could get your life license soon, but you need to get a contract with a company. They're not just going to say, oh, you got your license, cool, you can sell our products, because that's a liability to them. Us as agents, we're a liability. We're an asset in that we generate business. These insurance companies that aren't captive, like a Northwestern Mutual, where they have employees that sell insurance, these other ones use independent agents to connect with the public, market their products, and then sell the products, right? They don't have a staff of sales agents. We are independent agents that do that role. And so it's a liability for the company. They're not just going to say, you got your license, that's awesome, here, start writing our products, because then that exposes them to risk. And so I joined Brian's agency. Brian has a general agency, and he had the established connection with these companies to where when he says, hey, I'm adding a new agent, they say, okay, cool, we trust you. They wouldn't trust me outside of the fact that I work with Brian. In the same way, that is the hard part, is
In the
of
beginning.
being an agent
Yeah.
initially. Yeah,
Yeah.
yeah. And so we want to make sure that you understand the difference between a license, a contract with the company, and then how does the NNI element interact with those? We'll wrap up this section.
Yeah.
What is the NNI? How does it? Yeah,
Well, the NNI just takes you. I mean, heck, that book has got to be, it's thick. The binder of study to start, and then you do
mm-hmm.
some online coursework. You study through a binder. You have to take a closed book test
An
and
interview.
an interview to get in to make sure that you understand what you're doing. And then beyond that, so it's really a very specific education course for the agents to understand not just the philosophy, the background, some economics associated, some of the insurance elements, and why we're doing what we're doing and how to do it effectively. So it's really specific training. You learn more through that than you do, excuse me, getting a life license. Absolutely. But beyond that, then it builds a connection. Um, they hold a yearly think tank where you meet all kinds of people doing this. They hold monthly webinars with people on the inside. So there's constant training. There's constant ability to grow as an agent within the IBC community and learn. And that's really going to be the key, because instead of a whole bunch of people all doing this independently, we all have some sort of level connection back to the hub of the Nelson Nash Institute. And and that just means you have more opportunity to grow, learn more, learn what other people are doing, how they're doing it, how to do things more effectively. It builds a strength in the type of business we're doing with those companies too, because those companies have grasped and said, hey, what the Nelson Nash Institute and their agents have done has been very effective. The people who practice infinite banking through these agents have a very high persistency, and what that means is that they don't get buyer's remorse typically in a year and close their contract. They buy it, they keep it, they use it, they expand on it. So they're seeing that, like, when people take this as a lifestyle, that is powerful. So you get a whole bunch of aspects besides just the in-depth training that you get through Nelson Nash. You also get the full network, and you get a lot more company backing because they like the business we're writing. It's good, effective business. And when it becomes somebody's lifestyle, those become great clients of ours, the other agents in NNI, and of the insurance company. So it's a super powerful third level, which is one of the reasons I think it's so important to work with somebody who's done that. And they've been vetted, they've been educated, they've had continuing education, and they have contacts.
Yeah. You don't, if you own a car dealership, you don't need to have a JD Power award to sell cars. But when people ascribe some value and significance to that, you don't need a Michelin star to sell food. You don't need to have a CFP to give financial advice. The CFP uh, is a certification that you can get. Now, what you need to sell securities and what you need to give financial advice is having an actual registration with the SEC and taking your Series 66 exam, right? There are like hard requirements. The CFP is just a training course. Like, I'm going through the CLU course right now, Chartered Life Underwriter course. That is a designation that I will have, and I could put that behind my name. It's a college level course that I'm taking on life insurance and underwriting right now. Well, the same company that administers the CLU also administers the CFP. It is just a certification, it's a designation. You don't need it, but people feel more confident when they see CFP if you're giving financial advice. In the same way, you don't need an NNI certification to write a perfect IBC style policy per the Nelson Nash guidelines, right? You don't need to have gone through this, right? There are people in the industry that do this business very well, and I'm thinking of one in particular, big name in the space, does IBC, does his clients well. Recently, I think this year joined NNI just because he was like, well, I like I know all the people there. I just haven't done it because frankly, I just didn't want to do all the big heavy lift of going through the exam and the training. And now it's an online, and there's an in-person training, et cetera. And so it's a stamp of approval that shows that I think if you're a consumer listening, if you're a prospective client, it should set apart those of us that have been willing to go through and spend the time, effort, and money to certify and demonstrate that we have proficiency in what you're looking for, which is IBC. And likely you found IBC through learning about Nelson Nash, right? So it's just it's a not required component. Your agent needs to be life licensed, and they need to have a contract with the company that you're going to get a policy through. They don't need to be NNI, but we like these companies because, like Brian said, they support the NNI. They come to their conferences. They understand when we talk to our people at these companies and we say, hey, we have a client who wants to maximize PUA, for instance. How can we do that? Like, they understand these conversations we're having with clients, and it's our clients. I say ours as in like the collective NNI body of agents. Our clients are the most knowledgeable that these companies deal with. Most policyholders, it's a piece of paper in a drawer. They don't ever call in a policy service to say, how much mech room do I have? How much PUA can I pay? How is the policy loan interest rate going to be recalculated for this year? Like these questions and then the knowledge that our clients have are orders of magnitude above your standard whole life insurance policy holder. And
Oh
so
yeah,
that sets these companies apart.
I've had both RVPs. That's a regional vice president within in both of those two insurance companies we like. Who is they kind of help out all the general agents. So that's who we don't report to them, but we fall under their umbrella. So when we need something, they're helping service us and sort of things like that. I've had both of them tell me that like we know more about life insurance than probably 98% of people selling life insurance. And it's crazy to think because there's people that have been in this game for 30, 40 years out there that have been doing it their entire adult lives. And I really think that that comes down to not only the fact that, both of us have a natural tendency to want to study and learn more consistently, and it's just what we do on our own time even, but even beyond that, which is important. If you're going to work with somebody who's continuing to educate themselves, by the way. Even ask them, hey, what are you reading about the industry? Anything. I mean, it doesn't mean you have to be consistently doing a curriculum, but if you're not further educating yourself in this business, you're doing it wrong. But it's pretty wild that the level of knowledge that so many people don't have. And that's true, man. It's what you were saying. But hey, let's like shift gears here and talk about if you come to work with us at Remnant Finance, what's the process that you can expect?
Yeah. So generally speaking, you're going to engage with us on the podcast, on YouTube. However you come across us, referral from a friend, whatever. Your first thing you're going to do is just book a call with us on all of our content, and on our website we have a scheduling page there. It takes you to the calendar. You're gonna
Remnantfinance.com/calendar.
Yep. You're gonna pick either of us. Also, our new agent Rob Green is on there as well. You're gonna get to pick one of our calendars, find a time. Brian and I are on opposite coasts, and so hopefully we have a pretty wide range of availability that works for you. Doesn't matter which of us you pick. You're gonna schedule a call with us, and generally the person that you schedule with between the two of us, we try to keep tabs on the business that we're doing. We try to CC each other on all of our communication regarding clients, so that if at any time, if I'm, I'll be off the calendar next week. We're gonna do a little staycation here, and so if I'm off the calendar, I can just, like, Brian could jump in. We share our notes and everything like that. Ideally, we're gonna, because I have higher fidelity and I have a higher oversight with the policies and the clients that I've been working with. I'm a lot more familiar with it, so we generally just kind of keep our clients generally walking through the same process, but doing the calls. So essentially, there's my group of clients and Brian's group of clients, even though they're all our Remnant Finance joint clients, right? That's gonna be the first step, is just getting on a calendar, and then I have my process for how I generally go through calls. Brian, what do you do on call one?
I mean, call one is just an introduction, find out who you are, what you know. So mostly it's just me finding out about who you are, what you know about this concept, what you think you know, what you don't know, what questions you have, what you've read, what your goals are, and some very basic like income stuff. And then based on those questions, I let the first call kind of drive itself. I don't have a particular structure because everybody's coming from a different level of knowledge. We have people that have already set policies up elsewhere in the past and they've been educated somewhere. Sometimes they don't have their agent anymore. Who knows? Um, we've have people that a friend told me about this and said to call you, and that's where they're starting. They've listened to nothing. They've they don't know they maybe read something or watched one video on YouTube, so they're coming in with zero knowledge. So I don't have a specific guideline for my intro call. It's really going to come down to the person who called and find out. It's kind of just fact finding and getting to know each other, building a little bit of rapport and figuring out where you are and what you want to do with this and if it fits your life.
Yeah, same. And not everyone that we do an intro call with does this make sense to do. So
No.
what are some things you look for? Like what are a few instances where you just say, "Hey, IBC is not for you right now."
Well, even before that, I've had people call and it's just like, I'm not for you. Um, but I've had a handful that it's just like we're not going to mesh well together. And it usually
Yeah.
comes down to the fact that they haven't listened to our podcast and they're coming from a whole different ideology. And I could tell in one
Yeah.
call that we're going to be a terrible fit. So
Yep.
I've even had that and said, maybe you want to find somebody else because I'd rather not do the business with somebody that I know that's going to be diametrically opposed to me as we get to know each other. And that's fine. And it's actually good. You should go find somebody that you want to work with. But that's rare. That is pretty rare. Number two, just not too long ago, I've had a couple calls in the last 2 months where the person comes in, they want to do this, and when we look at their debt, when we look at their income, when we look at what's left over at the end of the month, it's just not the right place to start. Like, I'm not going to put you into something that is going to build stress into your life. Some if the need for death benefit isn't there, we'll have a conversation about let's get you some convertible term that you can afford and look at establishing a banking policy and a banking function for your family later. So if this is gonna create stress in your life, it's probably a bad move if you don't have the cash to do it, if you don't have some sort of positive income in your life.
Yeah, putting in a savings habit if you don't have one is critical. This is a tool just like any other that, you like a knife can cut food and it can cut people, like every tool has uh, your car gets you to work. It can also mow through a crowd of people, right? Um, if you're in Germany. So the 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 power of this tool is undeniable, but if you don't have a savings habit, if every month, every dollar in Parkinson's law is eating you up, the credit cards are maxed out, or you are are struggling to pay those, like maybe a tool like Currents where we instill a savings habit and kind of put those barriers in place to psychologically break this spending habit that you have, then that might be the first step. And like you said, convertible term down the road. But I agree that we we have used this podcast as a filtering mechanism, like,
Yeah.
and I've definitely I try to not hold to like not really filter, and this might not be like a great business model, but like first calls I don't want to filter because I don't want to like get down the road and us work together or start this process and waste both of our time if the fact that, like, I mean, I'm a Christian nationalist, an isolationist, a bigot, a xenophobe. Like, I have pretty extreme views beyond like just the left right paradigm. Like, I'm too much for your typical conservative. I'm way beyond that pale. And so if that's not going to gel, like I'm never going to even cater to thoughts that like any of the pandemic interventions were even remotely rational, practical, or anything but just a total tyrannical control. Like, so no, these kind of conversations, if you're like, I mean, if you got your boosters, like, we're just not going to work together,
Yeah.
not by like, I will, but you just need to know, like, I'll probably mock you, and we're going to have these conversations with a tone of like, I'm just not going to filter, and I'm not going to just kind of like, I don't know. I'm just not going to play these games for the sake of, let's just get a policy done. Like, we need to work well together because we're ongoing service, and we'll get to that towards the end, like what you should expect after we have this call. But that is a pretty good filtering mechanism. And if you want like kind of like if you're more looking for just some, feel good about your stupid ideas, and you just want kind of a limp wrist to sort of agree with you on everything, like we can find a liberal leftist um, advisor for you, I guess. The NNI, this concept of BYOB, becoming your own banker, like a lot of it tends libertarian anyway. So you're not going to really find, there's not that many that I know of that are these kind of just like, you know, soft handshake liberals, but yeah, I'm sure you could find some. But,
Yeah, and
yeah, let's,
another way I didn't work with somebody recently was they listened to the episode with Troy about low stress trading, and they wanted to do a policy actually. It was like right before that, and had listened to that episode. And it was a local person. We sat down at a local diner, and the objection was, well, why don't I just do the trading? Why would I even do this? And couldn't get past the fact of like the banking function when they saw a potential to have a really great return on their money. And it was just like, and by the end of that conversation, I said, I agree. You should just do LSD. Like, skip
yeah,
IBC because I can't, it was like just up against a wall because all they could see was that rate of return and couldn't see the banking function, the ability to capitalize, death benefit for their family with multiple kids. Like the focus was so hardcore of like, why would I even consider that when I could like earn this rate of return? And I just said, you
mm,
know what? You should probably just join and earn the rate of return. Like, I'm
yeah,
not gonna, I forget who told me this. I think was it Winnie Lau said if you have to drag them in, you're gonna have to drag them around, and it's better to
yeah,
not even start. Like, don't drag. If I have to drag you into this, then it's just not gonna work out. Um, but yeah, anyway, so the intro call, 90 some percent of the time goes great. Probably not over 98% of the time goes great, and then that leads us to like, hey, this probably is a good fit for you, and let's start an education process. But the underwriting process is typically, I say 4 to 6 weeks, but sometimes it can be even longer. So what we do to mitigate that is we do an intake form. So we gather all the information that we can or that we need to do the application. Get the application rolling because it is a no obligation application to you. Like the company, other than the fact that you might have to do the regular, the pee, the bleed, the blood pressure, do the paramedical exam, that's about the only headache typically in your life when it comes to underwriting that you have to schedule. But after that, you could walk away at any point. You could say, you know what, I don't want the policy. So it's a zero obligation process. So we always say if this is going to take 4, potentially 6, 8 weeks, let's get the process going if this sounds good to you. And then while that process is going, which we could talk a little bit more about that, but we start the education process either in between. Sometimes we'll do a couple calls first. A lot of times I'll hit a second call before the intake form, start the underwriting, and then we can dial in exactly how this fits your life before the policy is ready to go.
yeah. There's some who would say, who view this, the idea that like we like to get that application going. I want the company waiting on us. I don't want us waiting on the company. When we decide here's the policy structure that we want to go with, I want the offer to already be there. And typically, like the way that I kind of frame it with a client is think of like a mortgage pre-approval. If you're going to buy a $500,000 house, you might go and get pre-approved for a $600,000 loan. That gives you the room to settle on the amount that you want without having to later go get additional pre-approved, lending, right? In the same way, we don't have to have the policy structure nailed down with the initial ask. If we're in the ballpark and we can generally get a decent ballpark I mean, I typically don't myself after the first intro call where we kind of find out are we going to work together. Like I never talk about your specific premium structure. We don't talk about how much money do you want to put into this. This first call is really just Like you said, do you understand what you're going to be getting into here? Do you like? I want you to understand. Answer questions about IBC generically. Answer questions about whole life mechanics. Questions that you bring to the table, and then some things that I'm going to throw in there that, like, let's just make sure we're on the same page before we move forward. And typically, I generally have kind of settled into a rhythm of doing 2 intro calls. The second intro call, and I mean, the initial calls, I guess, are really just the education phase. I want to kind of walk through before we even start talking about your premium. I want you to understand premium in general. I want you to understand these components of premium, how they interact, why we might need to structure the way we do. So I really have lately done these 2 calls where I, by the end of the second call, I think we have a good idea. Is this something that you think you would want to move forward with? Again, not committing to anything. At that point, I usually will send the intake form after that second call. And when you fill out that intake form, that is a secure form that we built. That is not something that's going to go to the company. That's not something, again, none of this is committing you to anything, even when we send the application. But this intake form goes to us, and Brian and I build out the application because we need certain things on the application. And we can't get these answers that we need from the company until the application is on the underwriter's desk. Are you insurable? For how much? And at what rating? So as far as like when you get that intake form and you build out the application, what are you generally thinking when we're talking about? Because we have to submit an illustration, right? We have to submit some kind of policy structure, right? So how do you gauge what that should be?
Yeah, well, like you said, a lot of times it does come down to the second call before we start that, but we'll look at what a lot of times what I do, like you sort of mentioned in that pre-approval process of a mortgage, like you'll overshoot when you get the pre-approval. That way you have some room between what you want to purchase and if you have to bump up a little bit. And so a lot of times what I do is we kind of figure out what kind of cash flow they have, what kind of premium they want to pay. And I always explain, I'm going to apply for something a little bit more than what you want. So when we see that application, and it's going to be a little bit more generic of an of an illustration. It's not what we're going to work on. It's not exactly what we're going to dial in, but it's going to be somewhere above and beyond what they probably want. And the reason is I've gone through the education process with somebody that is like that's thinking small, like they just want to add this as a small piece. And once they get an understanding of taking over the banking function, they decide they want to go bigger. Well, if we submit the application for their initial thought, we have to go back to the underwriters and say, hey, you know what? We actually want to, can we get them approved for this much? So when you do the application, the insurance company, there's certain parameters in the underwriting, like a general guideline. This isn't set in stone, but it varies based on income. But approximately 25% of your gross income is the maximum premium you can pay in life insurance across the board when you apply for whole life insurance. So I already know, if I know their income, if they make $100,000 a year, the insurance company won't allow them in all likelihood to pay more than $25,000 in premium. So I can go anywhere from that down to what they want when I apply. And I don't typically put the application in for that max amount that they would take, but I put it somewhere in between. And when they make the offer, if they've approved for that amount, we can then submit the applicant or the illustration for what they actually want, the policy design they actually want, anywhere below that. And the policy is issued based on that overnight because they're already approved above it. So I like to apply for slightly more than they want. And I always
Yeah.
forewarn them like, hey, this number might scare you a little bit. You're not committed to this in any way. We just want to make sure that the underwriters will approve it. We're gonna fine tune your understanding of it and the illustration to the specific design, the specific parameters you want before we actually get this thing issued.
So yeah, I describe it as like a flow chart, right? So they're going to have these decision points. Is the total amount of death benefit requested, which is going to be a different number than the initial year one death benefit, but the amount that the company is underwriting, is it over or above X? Okay, now we move to the next A or B. Yes or no? Okay, is the insured income this? Is the premium relative to income this? Does the company on the initial questions that we ask for the medical stuff, because you're going to enter a kind of a surface level medical, you know, do any of these red flags pop? Yes or no? Do do we have any, military, do aviation, like all these? Just think of this flow chart, and at the end of the flow chart, there's a requirement, a set of requirements based on how we got to the end of this flow chart. You need to do the medical exam, so schedule the pee and bleed, right? We need records from your doctor. We need a financial statement. We need an aviation amendment. We
Supplement.
need a
Yeah.
military or supplement, yeah, military supplement, aviation supplement, high risk. Like there's going to be a list of underwriting requirements that result from the input factors on this flow chart. Now, that might not be an actual flow chart, but that's how I visualize it. So if I say, hey, maybe we're talking about a $20,000 annual premium. I might ask for 25,000 because if they approve us, because and again, they're looking at the death benefit, they're looking at the liability, the total amount that they're underwriting, not necessarily the premium. So if I say, hey, if we ask for this, we're having a conversation here loosely around this example of $20,000 annual premium, structured at whatever. Like we're sort of in that ballpark. I know based on your income, based on the conversation we're having, we're not doing a $50,000 policy, but we're also not doing a $2,000 policy, right? Like maybe this is the ballpark that we're roughly in. I'm going to go a little bit higher in our application because when they approve that, they're approving the death benefit that amount of premium is going to get. When they approve that amount, if I then go back and change it, the premium structure, the ratio of base to PUA is not really going to move the needle on these underwriting requirements. But if I say, hey, we actually want to do more premium, and that might trip us into another level of underwriting requirements. And so and we've had that before, where the policies we got approved, we got a rating, here we go, we're good to go, and we say, okay, actually we've changed our mind. We want to actually do a good bit more premium than we initially asked for. And they said, okay, well, we didn't need medical records from your healthcare provider before because of the flow chart where you ended up, but now we do.
Now we
And
do.
so now it's like, oh, well, shoot, maybe do we really want to go through this? We have our answer, we have our rating. Well, yeah, we want more premium because we want more ability to capitalize our system for whatever, the answer is yes. And so therefore now we need to get these records from your doctor, right? And so we'd rather get a more like encompass a wider range of possible premium structures that we can know are approved by getting that higher ask there. And so basically once we get that intake form, we build out the application, we generate an illustration, which is us putting into the software. I want X amount of annual or monthly premium at this structure of base to PUA, this amount of term rider, and then these other riders in there, right? Now that illustration generates, tells the company everything that they're actually underwriting as far as the premium and the death benefit goes. And now it's in underwriting. Now we're in the black box of underwriting. While that's happening in the background, what are we doing?
This is usually when we start more in-depth strategy calls. So just to summarize, like this is where we'll talk about more specifically how you want this money to flow, how it fits your goals. We'll go through the mechanics of the policy. We'll go through what the policy loans look like, how we utilize them, how, that's where the education phase begins and all of the aspects of getting this policy in place and starting to take over the banking function of your life. So, usually a couple of those strategy calls where we can fit that function into your particular life. Um, yeah, so it depends on the client. Like I said, and that's why every single one of these is totally different. Sometimes they need one of those, sometimes they need four of those to really get an understanding of what they're doing. And through that strategy, because we've already applied, like you said, at a particular ceiling, we can dial it in, make sure they truly understand this asset and what's coming their way, and have it ready to rock and roll to their specific life and to their family's lives or their lives and how they're going to use it. So that's the that's a major portion of the individual education phase, I'd say. Like you said, the first two calls are kind of getting them understanding what IBC is going to do. The next call or two during that strategy session is how this now fits their life and how we're going to use it, and
Yeah.
all the mechanics of the entire process.
Yeah. And so throughout this, there are some things that are like you can think of like the company requirements of what needs to happen is an application. Like the first interaction we have with the company is the application needs to be submitted, right? Your name doesn't cross their radar until the application's submitted. So they need an application. Then they'll need the underwriting and everything that comes with that. And then they'll give us an answer, and then we need to submit a final illustration. Here's the actual structure. Here's what we asked for, but here's what we want to go with. Now, policy is signed, policy is enforced, right? That's what the company needs. That's all of us, whoever you're talking to, whatever NNI authorized IBC practitioner you're going with. You listen to a podcast, you go with them, right? For whatever reason you choose, you settle on who you're going to work with. Those requirements are the same at the companies, right? But what each of us do individually is going to be a little bit different. And so, like I just from talking to our peers and from the way that they present their process, you know, I, I might not, might not be exactly right, but I know one guy who's like, you get two calls basically. We get an intro call. If you're not ready to do an intake form after that intro call, but we're not going to work together. We can try again, but like that's the time you get. You get to decide on that first call, and then we get one strategy call. If we're not settled on something, you find me later when you want to talk. Right? That's how I understand his process to be. It's like you got to get in. You get a slot on my calendar. We're going to do business, and then if not, like we'll see you later. Right? On the other end, there's another practitioner who is not going to submit an application until we're settled on a structure that we want, and like really wants to have this whole process, the education piece, how much premium should we pay for you? Let's talk through your specific situation before we even submit the intake form and the application, because we don't want to submit an application for something that we're not serious about moving forward with, right? So there's a whole level, like there's that overarching, we all have to do these steps with the company, but then how we do it is different. And in between Brian and I, like I'd say my average is probably 4 phone calls total. I like to do 2 introductory calls before getting the intake form, and generally it takes about 2 strategy calls where I say, hey, all right, their underwriting's happening in the background. Any questions they have, they're gonna message me. I'm the interface between you and the underwriters. So hey, they noticed that you had this issue back in your medical history in 2015, but they don't see any follow up. Did you ever get this appointment done? Do we have any documentation on this? All right, cool. I'll get it from you. I'll send it to them. They check it off, right? So that's going to kind of continue to happen. Hey, what's the source of the unearned income? Okay, it's rental property. Sweet, just one property. All right, sweet, good to go. Right? They're just trying to check off these requirements, and we're working with them in the background. But then
Yeah,
typically once that's happening, I like to do about 2 strategy calls. Here's where we could generally put you and what I think could make sense for you. Look at this. I want you to understand by the end of this what you're looking at with an illustration. And then on the next call, let's dial it in. So I'd say my average is about 4 calls from intro to finish. But what would you say your average is? No, just,
that's probably about right. Yeah, I've had as many as 10 before, and I've had as many as 2. So
yeah,
probably average is 4 though. That's about
yeah.
right. Yeah. Yeah, so then finally underwriters make their approval, or hopefully they give an approval, they give a certain rating, and then we come back to you, tell you what that is. We got the finalized design. Most of the time by then everybody's ready. They say let's rock and roll with it. So we submit it for processing. Takes a couple days usually. They put the policy together, say all right, it's ready for signatures, and then we do a policy review. So how do you do your policy review?
Well, lately I've been doing Loom videos. Loom is a software that basically you just hit record and it records your screen or a window on your screen. You can have a bubble of your face in there talking through it. But what I like to do, we need to go through this together, right? We need to walk through and make sure you understand this before you sign. But it's not always convenient, especially if we've done 4 or 5 calls already and you're like, hey, I've got a good grasp on the concept. I know what I'm looking at. I've never seen a life insurance contract before, but I understand the illustration. I understand the policy mechanics. I know what I'm getting and why. I just need to walk through the contract with you. And so I like to send first I'll do about a 30-minute video. I'll pull up the contract on my screen. I'll hit record and I'm just going to talk through it. I'm going to scroll through it. I'm going to draw on it. I'm going to highlight all the things that we would talk about if we were doing this over Zoom. And I like to basically, it always takes about 30 minutes to get through the entire thing. It's about 120 pages or so, so it's lengthy. But that contract's going to consist of the actual contractual verbiage. Here's like the action, here's the riders that we're having. Here's all of the actual contract. Then it's the original application, and then typically an illustration, the final illustration we're going to go with. And so it's a long walkthrough, but I'll send that video and I'll say, hey, here's a video walkthrough. Sit down, go through this, take your time with it, jot down questions that you have. If you go through this and everything looks good and you feel comfortable with this walkthrough, let me know. Then I'll sign it and I'll send it over to you for sign and final payment. If not, I'm not going to send you a copy to sign until I get the thumbs up from you that you're good. If you have any questions at all, you want to talk through this, let's hop on a call. But a lot of guys by that point are ready to go and they understand it. They just need that walkthrough. If they give me the thumbs up, then I'll send it over to them.
Yeah, I still always schedule a policy review on a Zoom call and walk through it. But same thing, walk through. I wouldn't say page by page because that would take it, like you said, 120 pages would take you all day long, and a lot of it repeats within those
Mhm.
contracts. So there will be, for example, the one that jumps out at me is like it'll step through the main policy and all the riders, and for example, they all have a suicide exclusion. So
Right.
I don't have to keep reading that to you. It's like same suicide exclusion applies. We just have to cover that once, and it's going to apply here. It's going to apply here, here, throughout the policy. So yeah, those calls typically still only take 30 minutes to do the actual policy review. Then we sign
Yeah.
it, they sign it, puts it in force. Once they pay the premium, the policy is now in force, and you have now started your savings program. You've started to build capital. Um,
Yeah.
but from there, it's usually not all done because there's going to be some sort of policy service, some sort of questions, and and we take those as they come. We help out as we go. We're trying to get more and more diligent, as with policy reviews. Sometimes they squeeze by us if we're being completely honest with the folks who listen. Sometimes they don't, and we get a chance to hop on the phone and see how everything's going, get some updates, talk about how your policy's performing. It's an extremely important function, and anything that you need, you can go self-service. And I know agents who almost tell their people like, hey, there's a self-service hub, here's the phone number, call policy services if you have anything to deal with, like I got you set up and going, you're on your own. And then there's the other side of that. I know agents who they want sort of the control of like knowing how like they want their clients to take policy loans through the company so that they can track what everybody's doing and make sure they're being diligent. And I think that's a high level of control. So you got between like you got the all I wouldn't call it authoritarian because it's a contract with you and the company and nobody can force their way inside of that. But you got almost from the authoritarian side to the laissez-faire side on policy service. And I think we're somewhere in the middle. A lot of our people are very comfortable taking care of most things on their own. It's just the way they operate. Cool. Let us know when you have questions. We'll go over whatever you want. We got other people who need their hand held a lot more, and that's cool too, because that's the relationship that we have. That's what we want. We want to make sure that this works for you forever. So policy service kind of runs a little bit of a range on the individual
Hmm.
client and how much they need and how much they want. Some of them don't want to deal through us. They'd rather just take care of everything themselves. That's fine.
Yeah, there's a range of things that you can do that you have the contractual right as a policy owner. Obviously, taking out a policy loan, paying premium, adding additional PUA premium, paying back the loan, paying in your premium deposit fund. That's probably 80% of what clients are doing is interacting financially with the policy when they're thinking IBC. But the other things you can do, you can change your beneficiary, change home right. There's like a list of things that you have the right to do and that you can do through your policy portal on your own. But I'd say it does come down like what we are open to the entire range. Some agents are going to be exclusively, like you said, it's all on you. Don't call me unless you have an emergency. To the guys that are like very hands on, do everything through me, please. Um, we're open to both. We're pretty much
Yeah.
like we have people that we don't that do all of their own policy service. I'll have guys that will text me and say, "Hey, I just got off the phone with policy services and they told me XYZ. Can you help me understand this or whatever?" And that person is more on the side of they're doing it all themselves. To the fact that they're calling policy service with questions that other clients will text us or email us to ask. And we have some who are like, I don't have time for any of this. I got a busy life, busy business. Can you just be my point of contact? And I say, yeah, of course. So they'll text me and say, hey, I need a $10,000 policy loan to this account. Can you make this happen? Right. We're willing to do that. And I want to expand we plan this year to expand our team to where we have someone who's able to help us with those. And, the goal is like, you can just email our policy service email, and then someone on our team is going to handle that request for you to the degree that you want to do that. But other people are just fully autonomous. Now, the industry requirement, there is no requirement for ongoing service in a sense. Like this can be, technically speaking, at this point, the last an advisor ever has to interact with you, right? There's no requirement
That's
that
a
we do anything for you, and that's on. I mean,
that's a
it's it
disservice.
yeah, and there are agencies, and not so much in the IBC world. I think our goal, and the goal for everyone who's part of this is like the education piece. Like, we're not just trying to get you a whole life policy and never see you again. It's like we want you to practice the infinite banking concept, and therefore you're going to have questions. And we spend all this time educating you and we expect that questions are going to continue. And so I don't think in our general niche there's much of like the see ya, you have a
Yeah.
policy, I got paid, never seen you again. Like, but that is
I,
technically a bare minimum. There is no requirement for ongoing service. So you should search out and make sure and ask your agent, what are you doing for ongoing service? What service can I expect from you, if any, after this policy is enforced? That's something you should be asking, and your agent should be able to tell you exactly what level of support they're going to be providing you after the fact.
yeah, I always tell people, unless you divorce me and get another agent as a servicing agent for some reason, for better or for worse, we're stuck together until one of us dies, because I don't plan to
Yeah,
leave this business.
yeah,
And if
same.
I die, then you're stuck with Hans. And if you don't like his bigotry, then I don't know what to tell you. I'll be dead.
Yeah, um, yeah. So yeah, so we strive to provide ongoing service to the degree that you want. So that's our answer. If you ask us, what happens after the policy is enforced? And finally, the question everyone has is, you know, we're dealing with financial services, so there is a cost involved. What is the cost to work with us?
There isn't one.
You're going to pay the company a premium, but between you, the listener, the client, and us, Remnant Finance, there's no there's no scenario where you pay us anything directly. Once we structure a contract, that contract includes everything. Like, the companies pay us directly. So if a policy goes in force, we get paid just like any other commission. If you go work with the realtor and you don't actually sell your house, or you don't actually purchase a house, you might have an agreement where you pay the realtor something. But if not, like, the realtor is not getting paid until the home sells, right? And they're getting paid from the escrow company, but that's built into the cost of the home, right? When you sign the mortgage disclosure, and like, the real estate agent commissions are part of that final disclosure. So you set up with the mortgage company, here is my monthly payment, and here's all the things it's going to, right? So built into the cake there, baked into the cake, is what you're paying your agent. In the same way, typically a insurance agent is going to get paid based on the first year premium, essentially, is essentially how you can measure it, right? And so it's a that is all baked into your premium. But the product that you get and that you work with us or with your agent, the final illustration, the numbers you see, that includes how and if we get paid, and that's only if the policy goes in force. But you'll never pay us for our time. We've had clients we've done, months worth of calls with, and spent hours and hours talking and educating, and then they say, hey, this isn't for me, or I got the rating, I don't like my rating, and so I'm not going to do a policy. Whatever the reason is, you don't pay us anything regardless of the time we spend together. Our job is, on the front end, it's education. In the middle, it's the application. And on the back end, it's the ongoing policy service. But none of that is a fee-based thing for any of us as far as how Remnant Finance operates.
But if you want to tip us, you can. I'll give you my.
I don't even know how that would, I don't even know what that would look like.
I don't know.
Um,
You could just send me a Venmo if you just really feel like you want to give a gift. I'll take it, but we'll never ask for it. We don't charge any kind of fee for ongoing service. Only out of the love of your heart if you really want to. Nobody's ever done that, by the way.
I don't think anybody ever will. Like, I wouldn't,
I doubt it.
yeah. Yeah, it doesn't really, it's not really part of the that's not really part of the transaction of the process here. And so I
No,
think
it's
that
not. Not at all.
don't expect your don't expect any tips in your jar there, because I would be confused, honestly, if someone's like, like, that's just not, that's not necessary, and that's not what we do, and that's not what we, yeah, we're education on your end. We are a free service. If you choose
Yep.
to put a policy in force, then you pay the premium to the company. And we bring that up just because that's something that everyone wants to know. And people we've had in the past where, so I think I said at the beginning, oh, this is cool, thanks for teaching me about IBC. I went and got a policy with somebody. Well, hopefully you got the right policy, but we are also here, like, on the front end, we're that education company, but we also provide this as a business. This is our business. And so we work with we think the best companies, and we put you with a policy that we hope is the asset you understand the most. It's structured according to your needs. And once the policy is in force, we are here for ongoing and continued policy service to the degree that you desire. So that is our process in a very large, long nutshell. But yeah, if it's something that you want to explore, going back to the beginning, the first step is just getting on the calendar and having a conversation and seeing, does this make sense for you? And we'll go from there.
Cool. So
Alrighty. Well,
if you enjoyed this, please subscribe to the channel, like it, please share it, book with us, remnantfinance.com/calendar. Link will be in the description. We'd love to have a chat with you and see if this fits, see if this works for you.
yeah. And one request on that, if you are a podcast, Spotify, Apple Podcast, whatever listener, if you have a YouTube account and you don't mind, it would help us if you would, even if you don't ever listen on YouTube, it would help us if you just throw a subscribe on the YouTube, because those numbers do help. And so, yeah, but that's just a favor if you don't mind. But otherwise, we appreciate all the support. We appreciate the listens, the shares, the likes, all that, all the engagement stuff. It all feeds into the algorithms and stuff like that. So, anyways, hope that's helpful, and we'll catch you guys next time. Cheers.
Yeah.
Thanks for listening to Remnant Finance. If you found any value at all in this episode, please subscribe, leave a review, and share it with a friend.
Remember, true financial freedom comes from taking control of your personal economy and breaking free from the status quo. So stop being a passenger in your family's financial future.
Boldly take back control of your wealth. Until next time,
This is Brian and Hans signing off.